Bitcoin is going to 100K. Now you can sit on Twitter, you can sit on TikTok, or you can just watch for what I'm about to show you. You see, the largest asset manager in the world just published their newest report, the Great Acceleration. We have spent hundreds of hours researching and looking at the development behind BlackRock into the blockchain space, starting immediately after all the China FUD from our previous bull run, when Bitcoin touched 64K, crashing all the way down to $28,000. That's when we first noticed their biggest plays, investing in the Bitcoin mining companies such as Marathon Digital, as well as Riot Blockchain and many other mining firms. And as we watched Larry Fink lie straight to his teeth, as well as other large fintechs, such as JP Morgan's Jamie Dimon, we are continuously fed multiple times that they had no interest in Bitcoin.
Let me just say one thing on Bitcoin. Bitcoin is, it just shows you how much demand for money laundering there is in the world. I mean, that's all it is. I mean, it is just...
It's an index.
It's an index of money laundering.
And yet, just a few years later, they are releasing a report on how blockchain will revolutionize our future. Now, if you want to understand the context of this video, I recommend heading over to my BlackRock playlist and going through all of the research and videos that we have posted over the last year. Now, there are amazing data points in this report. Starting with an industrial renaissance, supply chain weakness revealed by the pandemic and exacerbated by conflict in Eastern Europe has forced a reimagining of global supply chains. While lockdowns slowed economic activity, they could not derail major demographic trends. All of this leads into consumers needing a simplified way for transactions, utilizing Bitcoin. Now, why does this matter? You see, BlackRock hasn't only been investing into your largest Bitcoin mining companies. Conveniently, 2 months before Bitcoin with Lightning Network coming from Jack Mallers and Strike decided to partner up with NCR and BlackRock. BlackRock just increased their ownership in NCR as of February 1st. And yes, BlackRock owns 6% of BlackRock as well. Now they're not only invested into the Bitcoin mining companies, they're now invested into the payment processing systems, but now implementing brand new spot ETFs. And we believe the broader opportunity, leveraging blockchain technology for payments, contracts, and consumption broadly, has not yet been priced in. How does this send Bitcoin to 100K? Well, simply looking at on-chain analysis, we can see that Bitcoin has been being drained off of exchanges. On top of this, we can see that selling power is getting much weaker, meaning bears are about to go into hibernation. Because once BlackRock and all these financial institutions launch a spot Bitcoin ETF, they control the supply, they control the demand, they control the marginal cost of production for Bitcoin, and they control the competition. Which means not only is a spot ETF going to make Bitcoin actually raise in value, but it's going to make these financial institutions trillions of dollars. But hey, go ahead, sell your Bitcoin.